and then prices are going to stay elevated for longer than we want them to. But just the oil prices today is positive.
It is positive, but to your point, to what degree is there already scars? Is there already infrastructure damage? How are you viewing that, even if the strait remains open, even past a ceasefire? What the impact will be?
I think these are the big questions, which is one, can you actually see traffic move? Okay,
Right.
that's going to be a good thing. So far, they say it will. Let's see it move. The next thing is going to be those assessments of the damage on the ground. Now, from an LNG perspective, Kuwait said that they had some problems. It was going to take X number of years or this to fix it. I don't think we know. And I think that enough money and enough incentive, people can move things pretty quickly. It depends on how badly things are damaged. We don't know yet. That's going to take some time for that information to filter through. But the market does tend to look through these things as long as they understand that the lifeblood of the universe, which is energy, is going to get moving again. So I think that that is a big help here. It's really going to be a question of timing.
Yeah, and again, really enthusiastic markets. We're going to have the opening bell in just about 4 minutes time. Sarah, you're going to stay with us through that. Through the open, as S&P 500 futures up 0.8% on track for another week of 3% gains and on track for the Nasdaq's longest winning streak since 1992. We have your opening bell on the other side of this break.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Backward, an award-winning journalist. For the last 25 years, I've interviewed leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Backward. I'll start you with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision. But
You have to have the truth tellers, right? And you have to be the listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Backward. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just moments away from the start of cash equity trading. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off this morning, and we have gains. They are starting to temper themselves. The president just out with a Truth Social post moments ago saying that, yes, Iran has reopened the strait, but the U.S. naval blockade does remain in force, that he still will be preventing Iranian ships from coming through as those negotiations unfold. So we were up some 1% in the NASDAQ. Now we've just taken it off the rails just slightly, but we're still up. Over the opening bells, capital markets are wide open. We have some IPOs. Avex, their defense company, I think they're raising around $320 million for their IPO. So not the biggest thing, but not nothing. I mean, these small companies are able to list. That's great news. Along the same lines, Calera, they're an obesity biotech company, also looking at a listing too. So, volatility, who cares? List your company on the S&P 5 or on the NASDAQ or the NYSE. Let's look at some of the stocks that are moving. Again, the price of oil has been falling pretty tremendously. We're now at an 80 handle for WTI crude, Occidental, Chevron, Exxon, all down at least 2.6%. Again, just to remind you, Iran's foreign minister said that the Strait of Hormuz is completely open for all commercial vehicles for the remainder of the ceasefire period. One of the corporate stories we're watching, Netflix, those earnings topped estimates, but its outlook disappointed despite recent price hikes. Those shares down 9.25%. Co-founder Reed Hastings also announced plans to step down from the board. Analysts now looking for more signs that the company has a plan for its future after its deal to buy Warner Brothers fell through. So a lot of volatility. Let's head on back over to the desk because patiently awaiting is still Sarah Hunt from Alpine Saxon Woods. Sarah, I was just talking about that post from President Trump saying that, yes, the strait is open, but the U.S. blockade remains in force. What are you doing right now with this kind of level of headline volatility? What becomes your North Star when there are so many tail risks right now?
I think once again, we have to actually see what happens. I want to see physical ships moving through. I want to see that oil trade resumed. And I want to see stuff coming through and getting back into those supply chains, because you had stories this morning that KLM was looking at curtailing flights because the jet fuel is an issue. You have a lot of places in the world where the lack of product is a problem. So you need to see that to start really resuming. And the back and forth of the headlines is it's fodder for a lot of things, but markets want to see that things actually go.
By the way, how much of this is just the huge rebound that we've seen that has been historic on many levels is also just tied to the fact that valuations came down and now look really attractive into what's expected to be strong earnings?
Well, what was interesting is that even with the war on, we were seeing earnings estimates being raised across the board. So that was part of what was driving some of the snapback in the last 8 days. This is going to be a bigger piece if this is really, this is sort of the end of what needed to happen. But the fact that earnings estimates were going higher, which, was a little bit tricky with higher energy prices as well, but a lot of it was on the back of more spending and more capex. So that is, the market sort of grew into its valuation because the multiple came down as the earnings estimates were coming up. So there was a point at which you could say, okay, this is starting to look more reasonable again.
And then a lot has been made too about software and the ride it's gone on. I mean, I was just looking at the week we've had in software. So the S&P software index, it's up 13.6% week to date as of the close yesterday. I'm pretty sure it's up a lot again today. And what is happening? That would be its best run in 2001. As far as I'm aware, nothing has changed in our fears that AI is going to completely eat software. Is it just short covering? Is it overall market optimism? Is it cheap enough to buy in?
Well, I think that there was that first you had the initial, AI is going to eat the world and it's going to start with software. So nothing is going to survive. And then you had a really big sell down in the entire space. And then I think people started looking at that and going, maybe it's an and not an or. Maybe there is going to be some interplay. And then there were a lot of discussions about interplay between the software companies and AI. So I think that there was perhaps an overly dramatic and overly pessimistic view, and that bounce back. I mean, it was up 13, but it was down something much more dramatic prior to that. So,
well, it has been in this bounce back we've seen for the index where we keep hitting all-time highs. Today would be the third one. Only Alphabet of the Mag 7 is back at a record. Everything else, yes, it's rebounded a lot, but is yet to hit a record. Is there something that's still holding back these big cap tech stocks?
I think some of it is the combination of CapEx, the change to a more capital intensive business model than they had before. And I think it's just concern that while companies are going through a big CapEx spend and not yet seeing those returns, should it have the same valuation that it had when it was in a position where it was just harvesting cash? And I think the answer is people are waiting to see how that goes before they can get very comfortable with it.
This is with all these things, Sarah. I feel like whether it's the war in Iran, whether it's where we go with spending, who knows what we're going to look like at the end of the year, let alone who knows what we're going to look like in 2 weeks' time. So how do you sort of build a thesis for that? Because yes, it's important to be a long-term investor, but we don't know what the long-term is going to look like. We don't know the permanent scars of the war in Iran. We don't know how much AI is going to reshape this economy. So can you plan out a portfolio for a long time horizon given those left tails?
You can plan out a portfolio and you have to keep monitoring it and keep looking at it and deciding whether or not things are going to be in and out of favor in even a 12-month period. So, it is for longer term investors, you stay invested because it's been the right thing to do for a very long period of time. And even if the things shift underneath and the sector shift underneath, there's still a reason to believe that there's both innovation and growth that happens if you've got global economic growth. It's really a question of timing and when it's best to pivot a little bit more, a little bit less in different directions. But I think that you absolutely can plan it. You won't know the ultimate answer, but you can certainly say this is a valuation where even if it's a 50-50 chance, then that's okay too, right? It's a probability set of distribution.
So one of the other fun things that's been interesting to noodle over about its place in the portfolio has been gold. I know I've been asking you about it nonstop, but one of the more interesting dynamics has been when a risk on rally has been happening, as it is today, gold also moves higher. And you can see there gold up 1.5%. It's moving higher as Bitcoin moves higher. It's moving higher as all the speculative assets move higher. Is that what this thing is right now? Just a speculative asset?
Well, I think it's also moving higher as the dollar moves a little bit lower. So there is there's a correlation there, but a lot of the historic correlations have been broken. And so the argument that gold was about inflation, actually, you could turn on its head and say, actually, it works better in a deflationary environment. But I think it also is a way for countries and people to express a view on currencies and government spending, and it's become a different kind of vehicle than it was a couple of years ago because it sort of lingered in obscurity for quite some time until the price movement made people aware that central banks were buying, and that became a little bit of a different animal.
The other thing is sentiment for this market and the AAII index. Just looking what it's been doing, it hasn't rebounded with the market. It stayed at kind of depressed levels in terms of how bullish individual investors are in the Association for Individual Investors. Is that a bullish sign that maybe sentiment isn't fully where the rebound of this market is?
I think it's more of an overall. This has been sort of a scary couple of months. This has been an unusual period of time because it's not something that one party can say, okay, never mind, we don't want to do this anymore. So I think that there is part of that is an overall concern about how this could impact the global economy and for how long that impact would last. I would argue that if we really do start to see things get moving here, you have a problem in terms of pricing for a period of time, but that's not going to stick around so much. And that was becoming a bigger problem. Are we going to get inflation? Does that inflation mean we can't cut rates? There's a whole lot of things that went together with that if this really unwinds, I can see sentiment starting to recover.
By the way, this economy feels like it's quite strong in terms of sentiment. The jobless claims numbers were strong yesterday. I was looking at the regional bank Ally. They had really good results because people were taking out loans to buy cars. We weren't supposed to be doing that considering that the price of oil was higher. There feels like there's this really big underlying strength still to this economy despite all of the fears.
Well, and despite some of the other soft data like the UMISH sentiment and some of the things that would imply that people were not having that kind of doing that kind of economic activity. I think the fact that it has continued does mean that there was an underlying optimism regardless of the things that were happening underneath. And that is also why, part of the reason why you've seen earnings estimates go higher, because even if people say they're not spending, they're spending. You can see it as the numbers come through.
True. All right, Sarah, you're going to stick with us. I'm so pleased to say that is Sarah Hunt. And let's get a check on your stock market right now. Again, just to recap, where we stand, the foreign minister of Iran saying that the Strait of Hormuz is now open for commercial vehicles as long as the ceasefire lasts with Lebanon. President Trump confirming that on a Truth Social post, but saying that the U.S. blockade remains. Maybe forget that last part. We're still rallying. It doesn't matter. We're at another all-time high. We're on track for a third consecutive week of 3% plus gains. I mentioned to Sarah that the Mag 7, all we had seen was Alphabet hitting a new record high. These stocks are attempting to do that. I was just looking at Amazon, for example. If it is able to close where it is now, up 1.8%, it will be at another all-time high. Microsoft has also been on a tear. So it is big cap tech stocks doing really well. They had sold off a lot, so it makes sense that the rebound's happening with the ones that sold off the most. Netflix, the top loser in terms of points being taken away this morning, down 11.2% after a second quarter that disappointed. We're going to talk more about that with Geetha coming up. And then it makes sense that the energy names are down too as the price of oil sinks more than 10%. And I'd assume that if you look at the sectors, that energy is the worst. Let's look at that. A safe bet. Down 4.7% this morning, down a whole heck of a lot as the price of oil goes back to in the $80 a barrel range. below $90 a barrel. That is consumer discretionary as well, as does industrials, as does information technology, for a gain of 0.8%. Coming up, I mentioned it, Netflix investors think executives lost the plot after the Warner Brothers deal fell through. We're going to discuss challenges ahead with Bloomberg intelligence analyst Geetha Raghunathan. That's Bloomberg Open Interest.
I'm Alex Rodriguez, and I'm Jason Kelly, and we're back with another season of the Dude with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
One in one history in sports, not good. And it's because that team was imagination, that team is putting yourself and a way, having yourself get behind that.
Erica Ayers Badon. I'm high energy. I'm very passionate. I have a lot of up in our zone.
I want to light fires and supplies. That is still one of my core mandates for all of my businesses.
Justin Tuck.
Tell all my anyways, just now like God. Don't wait till you're like you're 12 get in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Matei. I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. Sector is really propelling the field forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, they're going to be better. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Nice. Buckle up.
The rally continues. We're just off of all-time intraday highs. Some of that coming back in after the president saying that there still is a naval blockade on the Strait of Hormuz, but the excitement coming over the Iranian foreign minister saying that the Strait of Hormuz is now open for commercial vehicles. The Nasdaq 100 up 0.8%. The S&P up just under that as Brent crude moves back below $90 a barrel. Let's take a look at the top calls. What the analysts are saying this morning. First up, BNP Paribas upgrades Chevron and Exxon, saying oil prices should stay high thanks to tight supplies. Maybe an awkward day for that call. The firm says that the recent dip is a buying opportunity, and they must love prices today then, because we are dipping again with the price of oil. Next up, Mizuho upgrades Texas Instruments thanks to a strong AI server and industrial demand. The firm points to a wider industry rebound beyond, or this year rather, and beyond. And finally, Wall Street reacts to a disappointing quarter for Netflix. Barclays flags risk from elevated expectations and a guidance mismatch after recent price hikes. JP Morgan says it would buy on weakness and notes engagement growth remains modest. Let's get more into Netflix. Bloomberg Intelligence media analyst Geetha Raghunathan joins us, and Alpine Saxon Woods chief market strategist Sarah Hunt is still alongside me as well. Geetha, let me just get your initial reactions to the earnings we had after the bell yesterday.
So Danny, the print was definitely good. So first quarter earnings that they just reported was definitely ahead of expectations. But I think the street was definitely looking for a whole lot more. And they disappointed when it came to that because guidance fell short both of the top line and the bottom line. And a lot of the other things that we were looking for, in terms of engagement, yes, they did report, their internal engagement metric hit a record high. But again, there's a little bit of opaqueness there. So we're not really sure that some of the investor concerns that we had with the Warner Brothers Discovery transaction, the questions around whether engagement was plateauing, whether those were necessarily answered yesterday. Similarly, even on buybacks, we didn't necessarily get a clear answer. So they do have a lot of financial flexibility, a great balance sheet. They didn't necessarily up their buybacks. Again, signaling a little bit of confusion and making it a little bit of a head scratcher, I think, for investors.
Did they give us any reason why they thought that the outlook was going to be so bad? I did not get a chance to look through this yet because I think that that's one of those things that is this, I think it could be, or it definitely will be, because do you feel like there's any sandbagging or anything going on there, or that there's real issues?
I don't think there's any issues, Sarah. I think it's just more a timing situation that we have going on. So the second quarter guidance was anyway supposed to come in a little bit light. They had already kind of pointed to this in terms of the expenses. So content spending this year, Netflix has flagged be pretty high. It's actually supposed to go up to almost $20 million. That's a 10% increase versus historically about a 6 to 7% increase. So they're really kind of doubling down in terms of content. They make this big push into live content, into sports, into different verticals, really, streaming, video podcasts. So it's a little bit of an offense defense strategy, I would say. They definitely want to deepen their competitive mode, and they're also preparing, mind you, for a much stronger Paramount and Warner Brothers Discovery. So they're kind of really taking a look at the lay of the land here. So we knew going into the quarter that expenses would be elevated, but I think just the level and the magnitude of that of the expense increase in the second quarter probably was investors, our investors.
Do you think maybe these things stepping down, leaving the board in here, makes any difference to this company? Would that be any reason why they have such big bad losses for Netflix here at the opens?
I don't think so, Danny. I mean, I think this succession plan, if you just look across the media landscape, this is one of those succession stories that has really been executed absolutely flawlessly. He has been planning his succession all along, kind of handed off the reins to Ted Sarandos and Greg Peters. And so we knew this was coming. So I really don't think this has much to do with the share price reaction today. I think that is all really just a function of a little bit of the disappointment in terms of the lack of a guidance raise.
Thank you. So thank you so much for joining us. That's Geetha Raghunathan of Bloomberg Intelligence. Sarah, yes, there's been a lot of war volatility, but we had really the kickoff of earnings season. We have the big banks reporting earnings this week. Were there any big takeaways for you, especially after we heard from all the CEOs who I feel like the message was kind of like, yeah, there are risks, but everything is great?
I think that there was definitely some positive things coming out of the earnings season. I think that because the war was ongoing when it started and we were looking backwards to earnings for the fourth quarter, it's hard to say. People didn't want to give too much of an outlook, but the outlook seemed pretty good from the financial firm. I think that taking this Iranian conflict off the table, hopefully, is something that is going to put earnings back in focus. But not only that, is going to keep people from having to worry too much about taking their earnings down because of a slower economy, which is where people were headed in terms of directionally higher oil prices. We're going to have a slowdown. Like, I think that we can pick some of that off the table, which is some of the relief.
Off the table of other concerns. All the banks outlining how much exposure they have. The owl gets a big rebound this week. Not anywhere near the rearview mirror.
I would actually say that everybody's saying how much of a problem it wasn't always makes me think it's a little bit more of a problem than they want it to be, or they wouldn't be talking about it so much. I mean, I know that part of it is reassurance, but I also think that it's because it's not just the private credit people themselves, it's the lenders to the private credit funds. And I think that there is some problems in that space. There's certainly some illiquidity in that space as something that was sold as a more liquid product. And I think that that's, when you have that clash between illiquidity and people expecting liquidity, it's a problem. And I don't know that the underlying instruments are that weak as much as it's too many people trying to get through the door. And I think that that's going to remain a concern. And I think without the war, it would have been a much bigger talking point.
I love the way you're considering thinkers. It's marvelous. You're like a journalist. It's so good. I love skepticism. Sarah, thank you so much for joining. Enjoy the rest of your Friday and your weekend. That's Sarah Hunt of Alpine Saxon Woods. Coming up, how to invest in the market's biggest themes right now. We're going to talk ETFs. It's ETF Friday after all. Global X's Thomas Smith is going to be joining us tonight. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekday, only on Bloomberg.
Tune in to Bloomberg Business Week Daily, from the magazine that helps global leaders stay ahead.
Conversation around your company.
Bringing you insights on the people, companies, and trends shaping today's complex economy.
Planning very big things.
Premiums.
Plus, global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
Can't say fast and you are.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street for stories of capitalism in business, markets, economic, tech, and climate.
More than what you need to know, what you need to think about.
Investors are getting more selective, and ETFs are an easy way to express that sentiment and long have been. Sean Smith, senior investment strategist at Global X, says AI is still leading on growth, defense, and cybersecurity as geopolitical risks build it and maybe fade. That seems to be the case today. She joins us now. Thanks for stopping by. It has been such a wild ride in this market and a big rebound underway over the past 3 weeks. We add to that today with the Straight Forwards that's been open. What have you been seeing in your ETF flow? Where specifically is the enthusiasm?
There's been enthusiasm, I would say, across the board, very much like you just laid out there in that intro. It has been changing and it's on a day-to-day basis, a very headline-driven market. I would say where we are seeing the most excitement is surrounding some of our investment opportunities. One continues to be AI, actually, which had been a contrarian maybe view up until the last couple of weeks, but we have seen this recent run in software that has reignited some of that excitement. I think in defense tech, that is a real opportunity that we have seen at Global X. One of our ETF Shield outperformed significantly last year. This year, up about 15-16%, but we still think with that continued spend, not only the geopolitical escalation obviously would contribute to that, but also just the spending that we're expecting to see here from the U.S. government, looking out to $1.5 trillion in defense spending expected next year. We think that is going to continue and give this trade a little bit of life here going forward. And then I also think on top of that, there's still some opportunity there. Underperformer today, we've seen a little bit of volatility. Obviously, a lot of that very much headline driven, but as we do think we are expected to see this continued more broadly speaking across the energy sector, favoring U.S. energy production. I think that could be an here going forward.
One of the also huge rebounds has been in software. It's been really remarkable to watch. We're on track to the best week since 2001. I know you don't have a software specific ETF, but I'm looking at AIQ, which seems to have a few of these names like Oracle, Microsoft. What has been the demand like for this? Has there been decline? And what do you make of the fact there's been decline? Because the narrative hasn't really changed on this idea that maybe AI is going to vastly disrupt our society.
Yeah, so this is an interesting play. And I think that we have long been talking about ever since the sector came under tremendous amount of pressure that there was a little bit too much unscooped up there. Just in terms of the fact that it didn't make sense that all of these units are being caught up with the sell up. I think what we're seeing now, what we very much expected to see was a clear divide between some of those winners and the losers. So you mentioned the AI2 fund, and within that, you have Microsoft, Oracle, Broadcom, just to name some of a few of those. And those are names that have certainly caught a bid, to say the least, especially when you take a look at Oracle over the last 5 days or so. And we think that it's a couple of things. One, we think that this concern that we certainly have seen for quite some time around the single seed or the seed-based as single process tooling that had been a concern. We think that is going to remain a concern as we take a look at where there is opportunity within the software space. So much of that is about data access, it's about distribution, it's about AI tooling. So think about ways to monetize AI. And so we think the companies that are well positioned there, that are already embedded within that workflow, will continue or will outperform here going forward.
John, not enough time with you. Thank you so much for stopping by. I really appreciate it. Thomas Smith, Senior Investment Strategist at Global X. And of course, if you want more ETF coverage, every Monday, ETF IQ at 12 p.m. New York time. Just a quick recap of some of the headlines that we've been getting. Again, the Iranian foreign minister saying that the Strait of Hormuz is open. President Trump confirmed that, but saying that the blockade remains in force. Iranian TV just also now claiming that ships passing through Hormuz need the IRGC coordination. Even so,
oh my God, just take me out before going. Just break even.
101 for the
Couple here, break even, and then just now it's moving. And not get this.
Hour cross marks Victoria Fernandez on the relief rally, plus the
I see the wick. Oh my God, there's the wick.
talking about growing support for the government. It's the Bloomberg Open Interest.
Takes you out before it goes. Oh my goodness, can we go? We cannot go. It's what in the hell is going on here? I missed the Dow earlier. Nice smooth entries on those. I keep playing around with this NASDAQ. It cannot stay above.
Some of the world's most desperate people were getting crypto.
Repeat after me. I am a winner.
Okay, now it's ready. You gotta take you out first before it always takes you out first. All right. Oh, you can get something here.
And if you're not gonna do that, everybody's gonna suffer.
Una batalla, amor.
Money can do a lot of good. It can really transform people.
I'll just take that. Just get something out for today. Back some profits. Just break even. Stop loss. I mean, because
Countdown is
the
on.
wick.
Everything you
Entry on these wicks is
say. Get ahead of tomorrow.
that's the discount.
Days on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at criminal speed. Nobody.
Now it's going down. Nasdaq is moving now. Ooh.
On the hour. We're home for original reporting.
I'm Deborah Rodriguez. Stocks are up.
Whether you're backing up your home, exploring the outdoor, powering the job site, Harbor Freight has the portable generators you need.
This is Horizons Middle East and Africa, our top stories this morning. Renewed hope. President Trump says the U.S. and Iran could clinch a permanent ceasefire, with talks possibly resuming this weekend. Asian stocks fall as investors take a wait and watch approach to progress on extending the U.S.-Iran.
Newsmakers and market.
And
This is the
typical
one.
trade is always hold the losers and
Everyone, and welcome to the Pulse. I'm something not quite here in my
the winners. Look at this. Now it's moving.
permanent ceasefire soon.
Take us out first, and then oh my gosh, story of my life.
Iran peace deal will take about 6
Yes,
weeks.
until next week. Rate cuts at the end of the month.
And it's looking very good that we're going to make a deal with Iran, and it's going to be a good deal. It's going to be a deal with no nuclear weapons.
Meanwhile, Israel and Lebanon have agreed to a 10-day ceasefire, with Trump calling Hezbollah to, quote, act nicely during that period. With us now is Bloomberg opinion columnist Mark Champion. Mark, first of all, thank you for everything you do. There's great analysis on also what President Trump has been saying recently, which is basically, look, Iran has made key concessions in negotiations, and that a deal could be announced fairly soon. Is that true?
I think we have to discount very heavily what the president says, just based on past experience. We've been very close to a deal they've been conceding, giving up. He's won. We've heard all this, for weeks now. That said, it is very clear that both sides want out of the war.